So this panel is going to be really informal. The purpose of the panel today is to really give a good showcase of the different types of activities that are taking place using blockchain technology today, and get a sense for where blockchain technology might be tomorrow. So what I'm going to do is I'm going to introduce each of the panelists, and I'm going to give them an opportunity to tell you what they're doing at the moment with blockchain technology. And then we'll throw it out to the audience, and if you have any questions, if there's anything that you'd like to get more information on or any clarification that you need, please let us know. So first of all, we have Jennings from Filament. We have Han Verstaete, sorry, I say it bad every time. Han from Otonomos, Bettina Warburg from the Institute for the Future, Juan Llanos, who's an AML expert, Greg McMullen from Ascribe, and Tim Swanson from R3. So I'll start off with Eric.
Hi, my name is Jennings. Thank you for the intro. I'm the CEO of a company called Filament, and we're focused within the Internet of Things space, but we are big believers in autonomous devices, meaning these are devices that can actually, once they're deployed, they can be self-sufficient in the sense that they can discover other devices, they can communicate securely with other devices, and even transact value between devices directly, devices paying each other essentially. We are focused on our side initially on the industrial space. So we're working very hard to connect legacy industrial infrastructure, which sounds kind of boring, but turns out to be a very large need there. But we're big believers in trying to build a proper protocol stack that allows these devices to interact with things like the blockchain to be truly decentralized and autonomous, because we believe that's the only way that IoT will actually scale.
Thanks, Eric. Thanks, Amor. My name is Han. I'm the CEO and founder of a company called Otonomos in Singapore, based in Singapore. And we are a crypto equity, crypto security play. And what we basically do is we represent private company shares on the Ethereum blockchain. And as a bit of background, if you look at where value in the world resides, actually 85% of the world's GDP is held in a legal container called a private company. So you would think that maybe it's the sum total of all stock exchange capitalizations, but it is not. It is actually the sum total of value held through private companies. So if you work on putting private companies on digital rails, their shares on digital rails, we made the analysis that you are actually creating some sort of MP3, for lack of a better analogy, and making company shares transportable and easily transferable across jurisdictions, and that's exactly what Otonomos is doing. Thank you.
I'm Bettina Warburg. I work at an organization called the Institute for the Future. It sounds very grandiose, and in many ways that is a lot of what we do, is try to think bigger and more rigorously about what is coming our way in usually a 10-year time frame. So we started looking at blockchain several years ago and formed a working group that was really a combination of experts, different people in the Bay Area, different startups, different legal experts who could start to envision what blockchain itself might lead to in a 10-year time horizon. Our institute itself is really comprised of lots of different experts. We're academics, we're journalists, we're ethnographers and economists, and lots of different kinds of people. And so to me, a lot of the value comes from this combinatorial type of forecasting, looking at what's possible due to the technological affordances of blockchain itself, and then looking at what that means for society in different ways. How is the future of work changing? How is the Internet of Things changing? How are different parts of sort of human function changing that usually have had intermediaries? And then where might blockchain affect those in a new or disruptive way? So I'll be talking later today about our new lab, where we'll be hopefully doing a lot of the heavy-duty research and then prototyping different kinds of applications on blockchain, but I can talk about that later as well.
Good morning, my name is Juan Llanos. I've been working in financial services for the underbanked for the last 14 years. And my specialty is anti-money laundering prevention and regulatory compliance. And I got involved in the Bitcoin world, the crypto world, when in late 12, mid 12, when I was researching emerging payments for a conference, and I stumbled upon Bitcoin. And I realized I was a co-founder of a remittance company in New York City, where I live, and I noticed that this peer-to-peer transfer system was going to, I saw the writing on the wall. This is going to disrupt, disintermediate us. So I left my company, and I decided to focus 100% on financial services innovation based on blockchain and Bitcoin. I currently have a portfolio of 9 companies that I'm helping as an advisor, as an investor. And my goal is to focus on distressed economies and emerging markets and try to promote financial inclusion. And I'm going to provide some examples of what's happening today with technology that allows for value transfer. And my claim to fame, I would say, it was advising these emerging companies that Bitcoin was born regulated. I've been saying that for a long time. And there's this misperception or misconception that Bitcoin is not regulated. There's this Wild West. But value transfer mechanisms in whatever shape or form are regulated already by international law in several aspects, and especially the monetary component, the payment component. Of course, there's other uses for blockchain technology that we're all learning here today, and those are more challenging for law and for regulation, but the opportunities are incredible, and I hope we have a great discussion here.
Hi, I'm Greg McMullen. I'm with a company called Ascribe, and the idea behind this came from a conversation between 2 of our founders, one who is a gallerist working with artists, who is complaining to the other about the difficulties faced by artists working in digital medium. And he, being a technologist, said, well, why can't you just transfer digital art the same way you would Bitcoin? So what we've been doing over the past couple years is using the Bitcoin blockchain, and rather than transferring currency through it, associating digital artwork with a small amount of the currency, kind of as a token to represent it, and allowing people to register their work on our system, transfer it to other people, create unique editions that are traceable back. So that answers one side of the problem, which is how do you register your work and lay claim to it. The other is, how do you see how it's being used online? So on top of that, we've built a machine learning system that will go out and search the internet, find uses of work, and report back to the creator, but also allow the end user, who sometimes might wonder, well, who created this wonderful file, to go back and find the origination of it.
Hi, my name is Tim. I'm Tim Swanson with R3. According to Reddit, we sell Excel workbooks to banks, and we're snake oilsmen, apparently. So yeah, R3, we are a consortium. We've got 30 banks, and CBA actually was one of our core members, one of the first ones that we worked with this past summer. R3 put together this team about 1.5 years ago to look at technology to see what parts of this could be used for middle office, back office applications. And I guess you've seen our fake press releases, as Reddit calls them, about things that we do or do not do. I think we'll have some more, because my hands are really tired. Actually, I was on the plane just cranking out more of these press releases. And I'd be happy to answer any questions in a very corporate manner if you guys would like.
There are some people at the sides who have microphones if anyone does have a question. I'd like to kick it off, though, and ask a question first. And I think it's just some clarification here. So what we've heard today is that blockchain technology is being used for everything from value transfer to intellectual property management or digital rights management to crypto securities. And then, Eric, you mentioned that it's infrastructure for your Internet of Things platform. Is that right?
Yeah, we actually leverage the blockchain, the Bitcoin blockchain today, specifically for 3 aspects of our product. The first is registering the identity of the device digitally, so it's the digital identity of each device we deploy in the blockchain. We then track the contractual agreements between these devices. So we actually sell our devices on a monthly or yearly plan to our customers. The payment receipt for that actually lives on the blockchain, and the device only looks to see if it's been paid for by looking at the blockchain. It does not phone home to Filament, and that's again by design, by architecture from a decentralized standpoint. And then we also do small microtransactions if people wish to actually pay between devices with Bitcoin.
So where do you see these devices being used? What kind of devices do you have using your infrastructure at the moment?
Yeah, so 71% of all industrial infrastructure across all verticals is currently disconnected. So these are things like oil and gas pipelines, agricultural plots, manufacturing lines, fleets of vehicles. And so we are working to connect these old machines. So we have a small product or device that can connect to these machines through their diagnostic port and give that old machine an API. And now this machine can, send out over wireless radio its calibration data, any sort of errors it might be having, very much akin to the engine light that you have on your car. We're trying to give engine lights, if you will, to this old infrastructure that leads to massive amounts of cost savings and efficiency increases for our customers.
Okay, and Greg, you're using blockchain for digital rights management you were talking about. Can you just describe a little bit more about how your platform actually uses the blockchain behind the scenes?
Sure. First of all, we don't really like the D word, the digital rights
Sorry.
management word. We're firm believers in copy, and you can't stop people from copying things. So what we really want to do is provide visibility to creators as to where work goes and where it's been. So when a user registers a work, we take a hash of the file, which creates a unique cryptographic ID for the file, and writes that as metadata as part of a blockchain transaction. So that transaction, along with the hash, is recorded there for all time. If I transfer the work to you, then I transfer that small amount of Bitcoin to you, which signifies that the work has gone to you as well, which in the art context is really interesting because if you transfer it and then it's transferred again and again, 100 years from now, for example, if it's gone through a number of galleries and collectors, you're able to trace back through the chain and see the record of all of these transactions, sort of creating a perfect provenance for the work.
Okay, and do you see, provenance is such an interesting topic for blockchain because I know that there's a number of other different projects around the world who are picking up on this idea of provenance and looking at things from art to, goods and services to physical merchandise that's being created. Where do you see this going in the future? How do you think this is going to, I don't mean as a technological evolution, but I mean an evolution of the industry and what people are able to do. What impact does this have?
I think it has enormous impact in intellectual property through licensing. There are already projects underway with Ethereum where music can be licensed and sold through the Ethereum blockchain. There's a project called Ujo that allows royalty payments to be made automatically. So when you pay your 60 cents for a piece of work, the songwriter, the performers, the mastering engineer all get their micropayment immediately, which is really exciting for music. For supply chains, knowing that, for example, with projects like Everledger, knowing that when a diamond is pulled out of a mine and then transferred up through the system all the way to the jewelry store, you can trace that diamond back and know exactly where it came out of the ground and be certain that you're getting a non-conflict diamond. I think this idea of provenance has a huge application across any number of industries.
Okay, does anyone have any questions? Okay, Juan, we were having a really interesting conversation the other day where we were looking at this concept of, oh, sorry, Mark, yeah?
Just an interesting thing about taking a hash of a diamond and providing provenance. In order to be able to do that, in my imagination, there needs to be a way to create some digital representation of the structures within the diamond. So what's the solution that either you've got in place for that sort of thing, or is that just something you're thinking about? And if it is, what sort of technologies and partners and organisations would need to come to bear to be able to create that kind of digital providence of both this is the digital representation of a physical device or some physical artefact?
That's a question you'll have to ask to Leanne from Everledger. I think she's here tomorrow. I don't know what they've got in place for actually going from mine to jewelry store and what measurements they're taking and whatnot. But it sort of just is an example of the kind of thing that could be done.
I'm not sure about the diamond example either, but some of the potential synergies or potential connections that I can see is with technology like smart labels, which a number of companies are actually producing at the moment. And they're labels that you can put on anything that actually are NFC enabled or have data that they can transmit. And if you can look at how you could bring this concept of using the blockchain for provenance and also for tracking its movement through a supply chain or just through transfer from person to person, then potentially, you could end up with, in the pharmaceutical industry, you could end up with a situation where you could have a full QA audit of pharmaceutical goods as they move from manufacturing right through to retail, because you've been able to use that thin film technology and the blockchain and being able to trace that entire process. So that's one of the examples that I've heard of recently. Does anyone else have?
I think the question the gentleman asked highlights a general issue with any technology, and especially with blockchain technology, and the traceability and the trackability of real things, which is the interface with the real world.
Yeah.
When we have this incredible digital technology, new revolutionary technology that allows for an immutable ledger to be created to prove ownership and value and transfer and everything. So, but how do we interface it with the world? And my concern are in three areas for financial inclusion is, first of all, payments. And digital payments have to interface with real money, right? Fiat money and the real world as we know it. But of course, if we can digitize value transfers, that's a great opportunity. The second one is identity. I believe that we have to disrupt identity. We have to change the definition of identity and the legal definition or acceptability of identity. And again, but we have to interface with the real world identity. Someone has to record that a human, or certify that a human was born in somewhere, and that could be registered or represented digitally in a digital ledger that is immutable. And number three is property titles. These are the three things that, in my opinion, are important, and I'm trying to help with. And I have stories for three of them. But you were going to ask me about the financial application.
Yeah.
Because we rehearsed this before. So.
And it was a really interesting story too.
That was my cue.
That was your cue.
Yeah, and so, the first case is payments. The first application of blockchain of Bitcoin is payments and money. First of all, this token that is tradable, this asset that is tradable, and it could be considered as money. So I don't know if you're familiar with countries with monetary restrictions, capital controls. Some jurisdictions impose, due to political agendas, impose controls on people's freedom to acquire foreign currency or to buy and sell currency or invest, right? Such is the situation in Argentina, my country where I grew up, and Venezuela and other countries in the world. So sometimes the only way to store value in an asset that doesn't debase or depreciate rampantly as the local currencies is to buy foreign currency. And usually the reserve currency in any country in the world is the dollar, right, the USD. And the problem is the government has imposed serious, has criminalized even the purchase of currency above a certain level, and there's a lot of controls. So how do people protect the value of their currency, their savings? And of course, we have hyperinflation episodes every 10 years that basically decimate the savings of entire generations. But there's serious problems with money and with value and store of value. So today, Bitcoin is being used in many of those countries to allow as an escape valve to these people that are not able to store value in a safe, secure form of value. So, but I think that there has been a lot of talk about remittances as an opportunity, right? Lowering the cost of remittances, family remittances of money transfers. which is the industry I've been working with. But I think that the opportunity is mostly in business-to-business payments. And this is what is being used today. This is probably a conversation for the following panel, the financial applications. But imagine let's say, let's name American Airlines, right? American Airlines operates in 150 countries. Headquarters are in Dallas, and they have to expatriate funds from each country, generate in local currency, and send them back to the head office in Dallas, right? So every country that has subsidiaries, every company that has subsidiaries across the globe, and that generate income or revenue in local currency has to convert that back into the currency of the headquarters, right? That's a typical situation. So if you cannot, I mean, in Argentina, the only way to buy large amounts of dollars and send them back to the United States is to go through a process called, it's called a securities swap, right? You buy a security, a tradable security in peso in Argentina, you sell it in New York Stock Exchange, and then you sell it back for dollars. So pesos got into in Buenos Aires, dollars come out in New York City. So that is how money is moved out through a transport mechanism, which is the security, right? Well, it happens that the transport mechanism today is Bitcoin. So you buy Bitcoin in large amounts in Buenos Aires, in Argentina, or any place in Argentina. You immediately zap them across the world, and you sell them back in any jurisdiction, and you convert it back to the currency of your destination. So this Bitcoin is being used today as a transport mechanism for value by many companies, and it's a huge opportunity. And of course, there are certain concerns about this. What if it's also being used by bad actors to take money out, by narco traffickers, or it's possible that that is the case. But there is a legal way to do that in some countries, like my country, to send money out via Bitcoin. It has been equated to a security, so you can buy it in one country and sell it in the other one. So that is the primary use. And in Venezuela, of course, it's banned, it's prohibited. Bond swaps were banned by Chavez in 2009, but it's still happening. So there's this escape valve that is allowing people to, and even companies, to send large amounts of money out. And of course, there's an issue of liquidity. You have to build liquidity on both sides to be able to have the right amount of money. So that is a shadow banking, a shadow economy, or underground economy is happening today as we speak. And so and that means that the system that, as we know it today, has issues, but there is an alternative now. And we have to learn how to manage this, and we have to be able to incorporate this into the mainstream.
So I don't think that I don't think there's any way really getting around government controls on things, but just this concept of the value of being able to use this technology for being able to make cross-border payments, the value transfer that you were talking about, cross-border. Han, in your crypto securities platform, are you seeing the potential for that too, or is jurisdictional restrictions meaning that you can't offer, like kind of open the borders for the security trading with you?
Sure, I totally. So I think there's a commentator on fintech called Chris Skinner. I believe he's Australian, and he defines banking in the traditional way as pushing paper locally, right, within one jurisdiction, and fintech as moving data globally. So if you think about, instead of having the Bitcoin wallet with actual coins, having securities, in our case, private company securities, then you have a way of easily transferring and accepting also investors from any jurisdiction in your private company. So if I look at the title of today's talk about how will this impact our daily lives, well, I'm sure that most of us here in the room have, at some point in their lives, incorporated a company, right? And there's an element of friction already at the incorporation stage. I mean, when I recently incorporated in Delaware, they gave me a wax seal document. I mean, a wax seal is something that goes back to the popes, right? That's like medieval stuff. And there's lots of medieval stuff still in the companies that we use, and the wet signatures and the paperwork. So we're ripping all that out by using blockchain technology. But the major friction, I think, Amor, is in the funding, right? I see that a company of the future is going to be sort of a continuous process where you start with your 2-3 founders, you get your first angels in, and guess what? Every shareholder is going to have a digital wallet with their shares sitting there. So you like my idea, you put in 50,000, 100,000 Australian dollars, you get some shares in return, all on the blockchain. Then you let in a couple of VCs, and then you have this currently very artificial heartbreak between having been VC funded and suddenly listing on a stock exchange, the IPO. Well, the good news is IPO is out of the window in the future because it's a continuous process of funding yourself with the widest possible number of investors around the world, right? So with IPO out of the window, investment bankers are out of the window, which I think for a lot of us is also good news.
So essentially what you're saying is you see blockchain technology as being the kind of commercial driver behind an IPO is to be able to invite as many people as possible to invest in your company. And this just makes that an efficient, easy process from an administrative perspective.
Yeah,
is that right?
Two basic functions. It's the ledger it's the register of ownership, the ledger of truth of who owns shares in your company at all times. So you get that by the minute updated cap table, right, which is great in itself. But it's also the rails for transfer of shares. In the same way that Juan is transferring Bitcoin, we are transferring private company securities for now. But Tim, for instance, is looking at listed security transfer and the clearing and the settlement of all that with the group of banks. So we're working in the private company space, but I think over time you will see that as one continuum.
Would that mean automated dividend distributions as well?
Say again?
Automated dividend distributions?
Well, we already in the private companies, once you have hundreds of shareholders around the world, we already have a smart contract that at a certain time delivers your dividends. And that's actually quite easy. It's 11 lines of code.
Now, Tim, Han mentioned that you're looking at this at a publicly listed company level. Is that right?
I can't neither confirm nor deny that. So I can't talk about that specific use. We've identified dozens. I'm sure if you went around the room, we could all talk about different use cases people talk about. But honestly, the biggest thing, and I think I'll mention this on the...
Closer to your mouth.
Hello? You can't hear me? So yeah, we've probably identified several dozen. I'm sure if we went around the room, we'd collect like 100 just people thinking of different potential use cases. But by and large, I think a lot of the conversations we've had over the last year or so is how do you take those use cases and plumb it into the existing infrastructure? I haven't seen anyone do, and I was just talking to one of the consultants out there, that there hasn't been a really good analysis or a blueprint of which systems get turned off, what are the switching costs, what are the integration costs, what are the model, like how do you model these different financial instruments as I go through the back office. And so we spent a lot of time looking at really boring, mundane stuff, and obviously making up stuff on Reddit to get lots of PR. But no, to answer your question about registered stock securities, that's just one particular thing. We do care about capital markets. We're not particularly looking for things that are less than that. I don't want to say too much more on that.
But you mentioned there's lots of different use cases, and one of the things that I've always enjoyed about you, Tim, is that you were one of, there's a lot of people who do it, but you're very strong with that question, why do you need a blockchain?
This is unscripted, by the way. She just gave me a compliment.
This is just me throwing it at him. Why do you need a blockchain? Because what we hear about blockchain a lot. I mean, I'm sure it's in the paper now. Everyone's talking blockchain. There's a consortium of banks looking at blockchain. We've got research and development initiatives. We've seen that there's many different use cases, some that are financial, some that have nothing to do with finance. You're one of the, I was going to say great writers, but I think that might be giving you a compliment. One of the great writers in this space who constantly does ask this question and look at it. In your opinion, why do you need a blockchain? When does it add value? And what kind of use cases do you see that really do nail the potential for the technology?
Sure. So I'll say one small joke. You know how everyone a couple years ago hated gluten? Like, gluten's horrible, but they could never tell you what gluten is. And I think that's the kind of same thing as with blockchains. Everyone loves blockchains because they never really tell you what they are. Everyone loves babies, puppies, and blockchains right now. And hopefully we continue that because that's the cool hype. So fundamentally, the blockchains are useful for helping things that require preventing double spending. So the question is in your organization or in your activities, what activities require preventing that. Now, there's other things you could do also from that, but I think fundamentally, we haven't come up with a good term. Internally, we use the term shared ledger. I think that's something that we hope no one co-opts, and I'm sure in 6 months everyone's like, oh, shared ledgers is the greatest thing in the world. So I think fundamentally you could do a number of different things, but if I told you that, then we couldn't charge you to join R3.
Well, I mean, that makes perfect sense in the context of what Greg's working in, right? Because essentially what you're talking about is it's not double spending, but it's duplication, which is the same idea, only you're dealing with a piece of digital art and not with a value transfer mechanism. Is that right?
And we're dealing with trust networks, not public ledgers, so you can use that word instead.
But Eric, how does that actually play into what you're doing with your Internet of Things platform?
Yeah, it's funny. It's fascinating to hear just all the perspectives here on how people are using blockchain. We are big believers in it. We took on blockchain as part of our core infrastructure out of an engineering need. It wasn't like a great buzzword to use. I mean, we're all a bunch of engineers in our company, and we had this need where this is a quick story of how it worked out. We had customers who were using an earlier product that we developed to try to connect to their infrastructure. This product was not ruggedized. It was a hobbyist device for makers and DIY enthusiasts. But then, we had one company who wanted to do collision avoidance of mining equipment on a work site with it, and we said, please don't. That's a terrible idea. And so because it wasn't ruggedized, it was an exposed circuit board. So we started talking to these customers and saying, what do you need? And what they wanted was this device that could connect to their infrastructure that could actually be paid for on a recurring revenue model, because it was very important to these big companies to have an OpEx versus CapEx issue. They didn't want these devices on their asset, on their balance sheet. They wanted to be able to pay for them monthly or yearly. If one broke, they could send it back, we'll send them another. And yet, in some situations, these companies were running equipment in the middle of nowhere where there was no internet connectivity. So we had an engineering problem, which is how do you have a device that can prove its own payment on device without connectivity to the internet or with infrequent connectivity to the internet? So we had this difficult engineering problem to solve, and it fundamentally leads back to trust in a trustless environment, which is a lot of what the blockchain offers. So where we landed was by leveraging some aspects of the current Bitcoin blockchain opcodes, as well as a way to show payment through a concept called a Merkle path, we can actually deliver receipts, provable payments to these small devices that, for all intents and purposes, cannot be counterfeit unless you had a massive amount of computing power. And these devices could be offline, and they can still be provably re-enabled by a payment method to them directly over Bluetooth from a tablet in the middle of the Australian outback where there's no cellular access. So we leveraged the blockchain because we had this massive engineering problem in front of us, and we wanted to be able to go down this road without, without having to say no to a lot of these customers. So, like I mentioned earlier, we use it in various ways, but that's really the key thing that it gives us, and really opened up the whole ability for us to do this at all.
I think we have a question over there. Is that right?
Yeah.
Yes, hi. This one's for Tim. So there was mention about permission ledgers. Could you just give us a brief of why they're better for settlement than Bitcoin?
Okay, so the term you use is permission ledgers. There's a whole discussion in the community, the difference between permissionless versus permission, and there's trade-offs to using either types. I don't want to get into the technical weeds, but fundamentally, permissionless ledgers such as Bitcoin is designed to be censorship resistant, and one of the trade-offs to do that is it's basically probabilistic settlement finality. So when each block, the deeper it goes, you have a certain extra amount of percentage of protection against being reorged, basically, block reorganization. But you can't fundamentally get 100% finality. There's always that extra rolling 0.1 or whatever. With permission ledgers, the goal is to work with registered assets. And with registered assets, the last couple decades, at least in the US and the UK, and I'm sure here in Australia, regulators have really tried to nail down when does settlement finality actually occur. That's actually going to be on the next panel. So I'd love to try and answer some more of that question then. But yeah, fundamentally, I would say that permission ledgers, so at least the way we look at it at R3, is how do you provide definitive legal settlement finality for registered assets. And it has to be done. Otherwise, the banks we work with will not use this type of shared ledger, and regulators will not sign off on it. Any other questions?
I saw there was some more hands up in here. Yeah, could we get a microphone? And then I think we have another question over there. There's one here first and then another one over there.
Jay Horton, Strategis Partners. My question relates to what Henning mentioned earlier this morning about $300 million a year that requires Bitcoin to operate, and whether, in fact, the degree of trust becomes a variable in a blockchain design, insofar as if you have a team or a network of people that implicitly trust themselves anyway, can we avoid the complexities of cryptography to produce much more low-cost Bitcoin applications that don't spend $300 million a year?
Yeah, so I've written about a bunch of that. Vitalik, if he's here too, he could talk to you about this. I think the joke Vitalik made last year, earlier this year, is the way the Bitcoin mining system works today. But in any given day, you have between 15 to 20 like block makers, these pools. So basically, you have 7 out of 14 or 7 out of 15 that come to agreement on a Coinbase transaction. So the whole point, I'm not saying that R3 will do it, but if all 30 banks decided to run their own validating nodes on whatever network we build, it'd actually be more decentralized than Bitcoin is. That's arguable. I'm sure people are going to yell at me on Twitter and stuff like that. Because even today, there's less than 20 pools effectively that actually create blocks. Whether that will be long-term, I know people argue, oh, it'll be re-decentralized or whatever. If you add elements of trust, then you're creating different security parameters of the network. Like the whole purpose of a permissionless network or something like Bitcoin was you're assuming that nobody could be trusted. But if you're changing that and you now add trusted elements to it, yeah, you could obviously change how much it costs to quote-unquote secure. That's a whole other conversation about what those actual costs would be.
Can I jump in just on that one quickly? Is that with Ethereum, although now we're still working with the proof of work, we are going to switch to the proof of stake. And proof of stake is essentially not longer mining using your CPU, but the person with the most money has the most mining power. And this may sound scary, but actually it's the purest form of economics. And we all look forward to what's going to happen at that stage.
Assuming participants are not suicidal, right? Maybe some crazy person wants to evaporate value and still break the network. So, but I think that to answer your question, I mean, the value, depends on what the purpose is, right? If the purpose is to create a technically 100% final settlement within a network of trusted participants that are very well known, it's a closed loop system, okay, that's R3 and it has a use, has a functionality. But if the Bitcoin blockchain is a different type of mesh network. It's a global open system for anyone to access. It's trustless in many respects, in the sense that you don't need to be known to be a participant or a validator or a miner, and you also have the permission, you have the freedom to create things on top of it. So because it's an open system, it's easily accessible, and it's open and it's free. So if some people joke that closed loops or permissioned ledgers are training wheels, as the AOL of the internet, whereas Bitcoin is the internet.
So I hear that all the time. I heard that at Money 2020. I heard that. They're like, oh, you guys are just building training wheels and everyone's going to use Bitcoin later on. Like, look, at the end of the day, everyone still uses ISPs to connect to the internet. And other ISPs connect to other ISPs. Like, you have a collection of private networks. There's no such thing as the internet. I see the same thing happening with these networks. Like, sure, you might have people cobbling together and they'll be together, but there's still a lot of utility in having networks based on relationships. There's intranets, corporate intranets out to wazoo today. They didn't disappear just because of 20 years ago. So there's lots of use cases, and so I'm not saying that people in our or the 30 banks won't touch other stuff in the future. I can't speak on their behalf, but no, we're not training wheels. I think that's really silly.
But your point about purpose is, I think, really interesting, because when we talk about, like, history doesn't repeat itself, but it rhymes, right? And a lot of the founders of my organization were researching ARPANET and doing most of the foundational research on sort of how would we use this tool, right? And the purpose in mind was research. That was the main purpose. It's not how we use that structure today at all, really, right? We use it for all kinds of things. And even then, I actually dug up a paper that one of our founders had written in 1971. And just when I started doing our own blockchain research, and I looked at it, and it's like, the statements that they made sounded totally ridiculous. It was, we're going to use this for this personal network for video streaming, was basically what they said, or for paid work at home, right? We actually do those things today, and it's kind of remarkable. So I think, it's not to say that, that these things are going to happen tomorrow, but when we're looking out far enough, we can say disruptive technologies, we don't always know what they're best at. And we're going to have to sort of experiment our way forward and figure out what are the best affordances, what are the use cases that matter most, how do they change societal behaviors in important ways. And to me, that means looking at, what is happening in the way people are organizing to do work today, or why are people talking about guaranteed basic income in government? And it's everyone from a libertarian perspective to labor organizations who are having these kinds of conversations. So there's a lot of parts of our society that are shifting. Philanthropy is shifting, right? And so we're starting to see these things layer on top of each other, and there's kind of no limit to what might materialize out of those kinds of combinations.
I think that's something I've noticed too, because the technology is so new, a lot of the conversation has been about what is the technology. And I know in the room next door, it's going to be a little bit more in depth than the little bit of discussion that you've just heard now, but people are talking about things like proof of stake versus proof of work, different consensus mechanisms. It's about blockchain as a technology. But eventually, once people start to get their head around the technology itself, it'll switch to what Bettina is saying and what some of our speakers today have done. They've said, okay, this is what I want to achieve. So it's not about how I can use the technology, but this is the goal that I'm trying to achieve. And it just so happens that this is the best technology to achieve that goal. I think we've got some more questions. Yeah.
Thank you. My name is Dean Georgievich from Optima Trade. My question is probably for Tim and Eric, based on the conversation just before about the tagging of or digitally labeling tangible items of value, if I understood correctly. The question is very simple. Is there any example of that application being used by any vault for, say, bullion type of products in which the bullion can be digitally labeled and traded freely between two parties without all these enormous efforts in organizing meetings, banking teams, and all that that goes with it?
Sure. So ItBit in New York, they have this product called Bank Chain, and the first product they're trying to work with is effectively working with the gold market. Again, I'm not endorsing it. I'm just saying that's something that they've been vocal talking about. They apparently will have DVP using their network, and they're going to have details supposedly sometime in the early next year on that. There's some other companies that have, I know Digital Tangible, they actually just shut that down. They had the custodial bank actually hold the gold in their vaults, and they generated a hash that represented that gold. We could talk about the efficacy of that. I know they shut it down, so this is to give you an idea of how difficult that market is. And there's probably like a dozen companies that want to do gold on the blockchain. We could do shirts on the blockchain or shoes on the blockchain. So I don't think there's anything really unique about that. But yeah, feel free to talk to me afterwards. I can tell you some of these other companies.
The challenge is tying the digital assets to the real asset. It's very challenging, what we talked about earlier.
Okay, I'm just conscious of the fact that we're running out of time. There was another question though, and then was there anyone else? Okay, we might do the question here and then that one question there, and then I'm sorry, but we'll have to continue the conversation.
Yeah, g'day. It's Ian Rogers from the newsletter Banking Day. Look, there seems to be an assumption at either end of the panel that just because the information is organised more elegantly, that payments might be speeded up. There was an example given in the music industry, but it seems to me that assumption's doubtful. A lot of businesses thrive on making payments as slowly as possible.
I think the question was, we are talking about speeding up payments, but there's a lot of money being made in slowing down payments and holding on to the money as long as possible. Yes. I think in the Ujo music example, there's an entire segment of the music industry and collecting societies and other back-end bits of record companies that are not at all happy to see this coming, because it means that their jobs won't be there anymore. And it means that the money that they're making on the money that they're not paying out to artists is not theirs to make money on anymore.
Same happens with transparency, radical transparency. Not everyone is happy with transparency.
Okay, so I'm really sorry, we're running out of time. There was one more question which we'll do really quickly, and then I'm going to have to move to the next panel.
This is not a quick question, I don't think.
Okay.
No, I'm new to this, and I've learned more new words in the last 2 hours than I have in the last 5 years. So apologies if I ask a basic question. But Tim, from what you said, where you have a number of banks helping you to develop a new network, and Juan, you talked about having more open sources. The one thing I'm trying to understand, in what way is what you're building, Tim, different from just having a Swift network on steroids?
Don't tell Swift that's what we're doing. Come on. No, I'm joking. Swift obviously is a consortium. They've had working groups on this stuff too. Again, maybe they do decide to do something that it's Swift, but my understanding is they're not looking at capital markets at all with that. They're a messaging network. So I suppose if R3 wanted to do that too, we could, but it's not our goal to be another Swift. We don't want to be a utility. We're a fintech company.
The difference is that in Bitcoin or the open ledgers, you can have your 16-year-old son work on it, not in R3.
Okay, I'm going to have to ask that if you have any more questions, you grab the speakers at lunchtime. We're actually looking specifically at financial applications of the technology in one of the panels today. So if you have more questions that relate to the financial application of this technology, there's also another intellectual property panel where you'll get to hear a little bit more about what Greg is doing. There's another Internet of Things panel and a smart contracts panel. So please do come along to those if there's more that you'd like to hear about in these particular areas. And if you could just give a round of applause and a thank you to our speakers.